Learning from the best, brother. Yep, for sure. So think about this, guys. If you had a stack of leads that went from the floor all the way to the ceiling, and you had a magic wand, and you could just wave your magic wand over this stack of leads, and you could pick out the people that are the buyers, do you think you'd probably be the richest person in the world? You're damn straight. And that's what POS are. POS are the buyers. Policyholders are the people that already trust our company. So when you're working POS, you know you're working with somebody who has already thought about life insurance, has already been sold on life insurance. Okay? So your closing ratio should be higher on POS. So a couple reasons why POS are good. Number one, they already have the trust in the company. You don't have to break down these walls of, is this a scam? I need to talk to my union president first and all this kind of stuff. So it's a situation where you don't have to build that trust. It's already there. Also, you know that they already have a bank account, so you're never going to run into bad banks. Also, it's easier to set an appointment. Higher show ratio. I one time went a year without getting no-showed. A year straight with no no-shows. It's because I was working 90% POS. And the things I do on the phone to solidify the phone appointment, they're already mentally seeing me come to their house. So they're not going to forget about me. Also, when I set an appointment, I've had people that literally had no need for an appointment at all whatsoever. And when I got there, I realized this, and I asked them, why'd you set an appointment with me? They're like, I just wanted to meet you. You sounded like a cool guy on the phone. So you got to be an actor on the phone. And you gotta snazz it up a little bit on the phone. Smile and dial. There's a reason they say smile and dial. Also on policyholders, there's a better retention. You're going to have about a 10 to 15% better, higher retention rate if you work policyholders. So they're also easy to up on the freedom of choice certificate. Okay, if they already have $10,000 a whole life, and they're thinking about that as their funeral cost, it's very easy to show them funeral inflation and up them on that later. Term conversions. Term conversions have to be a 95% closing ratio. All right. If you're not closing 95% of term conversions, you're doing something wrong. Okay. There's plenty of audio out there where Simon tells you how to do a term conversion. Also, with policyholders, they know that we're here to talk about insurance. All right, so when you approach a policyholder, they're already thinking insurance, so it's not going to be a major surprise to them. It's not like a bait and switch kind of situation. Okay, you're never going to feel that way. They already know you're coming to talk about life insurance. So with that being said, in order to work policyholders, you have to have a strong product knowledge. Okay, not just our products. So like Gio said, page 4 and 5, if you haven't looked at page 4 and 5 of the rate book, then you don't really know our products. Plain and simple, because that's the only place you're really going to find the details of how they actually work. All right? And if you don't know where the Select Life policy page is, it's like 14 or 15 around there. If you don't know how to just flip your book straight open to that, then you don't know the rate book. Okay? You don't know our policies. You should be looking at that stuff to know how much it should cost for $100,000 a whole life. So that way when they tell you, oh, I got $100,000 a whole life, I was 30 years old when I got it, and I pay $40 a month, that you know that's going to be a universal policy. That's not a whole life policy, because there's no way they got better rates than us. So make sure you study that stuff. Know the rates. Know what life insurance should cost for the different types of products. So that way when you tell them what they have, you're not saying, oh, that's probably a universal, or that's probably a term policy. All right, you're going to know that it's definitely a term policy. Gio, I heard you regurgitating that verbiage of being definite with your wording. Be for sure and confident with your wording. Don't use probably, maybe, kind of, because it kills your credibility. So your conduct in the house, you never ever want to beat down the last agent. Make sure you always build up the last agent. I don't care if Simon and I had to drag him out of the office and throw him out into the street because they were starting fights in the office. And if that's the last person that saw that client, you need to still build them up, or at least just don't even talk about them. Okay, don't say anything bad about the last agent. Also, if you're doing a term conversion, never, ever, ever say, I don't know why you got all this term. You shouldn't have been set up this way. Okay? Build it up like it's a good thing. Like, wow, you guys did a really good job. You got started in the right direction. You got your foot in the door. This is what a lot of people do. Wow, this is really good. Okay? And you see on this on this coverage over here, this coverage right here is the best type you can possibly get because it's all locked in. It's building you up cash value. It's building you up paid up options, which means that down the road you might not even have to pay for it anymore. Okay. Also, you know that it's never going to expire, so it's guaranteed to pay out to your family. And then the other type of coverage that you have, it's actually based on your age. Okay, so it's covering you right now. However, pretty soon down the road, it will end up going up in cost on you. It can jump up another $100 a month, $300 a month, could go up another $500 a month, and then cancel out. Okay, so what I'm going to go ahead and do for you is get this locked into your current age situation, so you never have to worry about it jumping up and canceling out on you. Okay, but I don't know if you remember doing this, but you see this little RC, and then I point to the policy sheet, our copy of the policyholder printout, and I circle the little RC in the code, where it says like 10 RC. And I say, do you see this little RC right here? Do you remember doing that? So when I say that to the client, I say, do you remember doing that? I know that they never are going to remember doing that because they've never seen that in their life. Okay, but I make them think that they did that. Okay, so I say, you see this little RC right here? That means renewable and convertible. Do you remember doing that? They're like, no. I'm like, all right, don't feel bad. You did that so you can convert this to whole life with no medical questions. Okay, it's probably been a while since you set it up, but that's the whole reason you did that little RC right there. That right there like perfectly sets them up to be able to convert their term into whole life. But you see how I switched it up, made it sound like a great thing, like they're smart, like they made the right decision from day one. If you do it the other way and you beat down what they have, now they're pissed off because they're just paying on something for the last 10 years that now you're telling them is a piece of crap. They're not going to be too happy about that. And if you talk bad about the last agent, they're not going to have as much trust in the company. Okay, so always build them up. Also on policyholders, if you feel like dressing up a little bit more, you can dress up a little bit more because now they know that you're the insurance guy. Okay, so if you just got done with interviews, you don't got to change. Okay, you don't got to change. Just take your suit jacket off. You can even keep the tie on. Roll in with a little bit of extra class, okay? I know when I'm going to see hard cards, I'm just throwing on the polo, the AIL polo, okay? Now on the phone. So what I want to do with this today, basically take you from the concept of policyholders all the way through the phone, in the home, to the end, to the close. On the phone, give them a reason to want to review their policy. So one of the first things I do on the phone, I'll just tell you guys right now what I say. I say, ring, ring. Hello, Joe. Hey, Joe, this is James Keefer with American Income, your life insurance company. How you doing? Okay, great. Hey, the reason I'm giving you a call is because it's time to do the review on your policy. So this way you can find out where your money's going, how much cash value is built up, and also to update your claim forms. So do you remember that freedom of choice certificate on your policy? So right there, I've made them interested in knowing where their money's going, how much cash value they have built up, and we got to update their claim forms. So there's something that interests them, something we got to do. And then the last thing was, do you remember that freedom of choice certificate on your policy? 9 times out of 10, they're not going to remember it. And the other time, they're going to pretend like they remember it. Okay? So I'm always going to let them off the hook and say, all right, don't feel bad. Pretty much everybody forgets about it, but that's exactly why I'm calling you. That's the most important document that you have because that's the one that your family will use to pay for your final expenses. Guys, I don't say funeral cost. I say final expenses. The reason I say final expenses is because final expenses is funeral cost, medical bills, cremation, outstanding debts, anything that could surround the financial stresses of you dying, okay? The financial burden left behind to your family are your final expenses. That way, I'm not going to have an argument with them about their funeral already being covered or have an argument with them about them getting a cremation and it's not going to cost as much. Okay, if they say that they're going to get a cremation, I'm going to say that's exactly why we have this set up, Joe. Okay, when I talk about final expenses, Joe, and I give you this number between 10 to 15,000, that's calculating in a cremation, any possible outstanding medical bills, any debts left over, any cost associated with your death that would become a burden to your family when you die. Whether it's an earth burial or a cremation, it doesn't matter either way. That's why it's a range, 10 to 15,000. Does that make sense? Okay, perfect. So that way it can prevent you from getting stumped on, I'm getting a cremation, so it's going to cost less, so I need less coverage. That's a bunch of crap. All right, so anyway, on the phone still. So at that point, I let them off the hook. Don't feel bad. Everyone forgets about it, but it's the most important document you have. That's the document that your family will use to take care of your final expenses and also help them to make a claim. So Joe, what I'm going to do for you, I'm going to copy your policy number to the back of that certificate and organize your folder. This way your family never has to worry about digging through papers or looking for policy numbers when it comes time to use it. And then I'll review and re-educate you on everything you have and how it works. And then I proceed to set the appointment. So why is that verbiage important there? Okay, I'm telling them what I'm going to do for you is copy your policy number to the back. I'm not saying what I'd like to do or what I hope I can do. I'm telling them what I'm going to do. Okay, even before I've set the appointment. That's establishing control on the phone. Okay, but I'm providing a service to them. So their family doesn't have to worry about digging through papers or looking for policy numbers when it comes time to use this. That plays right into what Gio said about last year. 1.x number of dollars, billion, whatever. You can make up whatever number you want. But I'm pretty sure Gio's number was accurate. He's probably researched it inside and out. I think you were to like the third decimal point there. But that plays right in to preventing family members from forgetting about this stuff or not making a claim in time. Okay. Then of course setting the appointment is very easy. We don't have to go over that. Just about solidifying on the phone. Make sure you say the appointment time a bunch of times. Make sure they write it down. Okay. Do me a favor. Go ahead and grab a pen and paper. I hear people all the time with the wrong verbiage on it. They're like, hey, if it's not too much trouble, can you get a pen and paper? No, it's do me a favor. Go ahead and grab a pen and paper. I'm not asking them to do it. I'm telling them to do it in a nice way. All right? I'm not saying get a pen and paper right now. It's do me a favor. Go ahead and grab a pen and paper. Soften up that voice a little bit. Smile. Okay? Do me a favor, go ahead and lock up your kids in a room for a while we talk about your life insurance, okay? See how it sounds nice, but I'm saying to lock up your kids in the room? You know what I mean? I don't actually say that, guys. All right? It's just an example of how you can soften up your voice and smile and it still sounds positive. All right? So make sure that you get them giving you directions. I know you got GPS. You're not going to have to write down every direction they give you. When they tell you to turn right at the church, go up the hill, and then go down the hill, go around the curve, and that we're at the top of the next hill. Guys, when you get directions, there's always a hill involved. Just pay attention next time you ask for directions. They're gonna talk about some kind of hill when they give you the directions. It's hilarious. You're gonna think about me every single time that you hear that now. But you're not even gonna have to write it down. If it's super complicated and tough to get to their house, now you can write it down, but you don't need to write it down every time. You're basically just doing that to get them to mentally see you. They're envisioning you coming to their house. If they can give you directions and mentally see you coming to their house already, that's going to help you solidify the sale. They're going to be less likely to forget about you. Okay? Of course, make sure you get the color of their house. Write it down. Color of the cars, a couple other things. It's going to help you, especially when it's dark at night. Right now it gets dark around 5 o'clock. So the extra little details will help. All right, so once we're in the house, my biggest pet peeve on POS is when the agent whips out the summary sheet the moment they sit down at the table and starts telling the clients what they have. Do not tell them what they have in the very beginning. Sometimes they're going to ask you, what do I have? If it's not time yet to tell them what they have, tell them, all right, Joe, there's going to be a quiz here in a minute, and that's the answer to the quiz, and I can't give away the answer to the quiz, okay? So my job, Joe, is to review everything that you have so you know how it works. But there are over 46 different types of life insurance out there, which all break down to two main types. And then I educate them. So before you can tell them what they have, you need to build your rapport. You need to build up the company. Don't just think because they have American Income that they love American Income. You need to build the company up again. People call us AIG all the time. They don't even know who the hell we are. And they have us. They've been paying us for years. And they got their AIG folders out. I love it because it's so easy to pull AIG folders because they think it's us anyway. All right? They sometimes already have it. And I say, this is good. Let's keep this out. But can you do me a favor and get your AIL folder too? Let's just backtrack and think about that for a second. They set an appointment with us on the phone. And they didn't even know which life insurance company we were. So it's really not that hard to set appointments. All you got to do is make calls and talk to people. And they're going to set it with you as long as you sound pretty cool. As long as you sound like you're not going to bore them to death once you get to their house. If you're boring on the phone, good God, how boring are you going to be in person? They know it's going to take 2 hours to get through this. If you're boring on the phone, do you think they're going to wait around for you to show up and sit through 2 boring hours of you at their home? Probably not. You got to get excited. So yeah, please don't tell them what they have right away because you need to have a little suspense. Okay, when they ask you what they have, if you tell them what they have, then that's them controlling you. So tell them there's going to be a quiz here in a minute. I can't give away the answer to the quiz, but then go right back into your presentation. Stay on order. Okay. Another thing, if you know they've been reviewed recently, if they've recently seen another agent, I don't care if Gio was there last week. I don't want you asking them what Gio told them. Did Gio show you this? Did Gio show you that? Did Gio do this? No, don't do any of that crap. Pretend like they've never been seen before, and you're going to do your presentation the way that you do it, because what happens when you ask them, did they show you this? Did they show you that? You start skipping parts of your presentation. Okay, don't skip parts of your presentation just because they've been seen recently. Okay, you need to do it your way. So it's going to go like this. From the beginning, it's going to be build rapport, build up the company, collect referrals. Okay, when you collect referrals, you're going to say, before I review your policy, I have something very important that I have to go over first. Then you can hit them with the child safe kits. The catch-up program. Don't forget the catch-up program. The catch-up program is huge. Find out how they got, if they're not a union member, find out how they got American Income. If you're seeing a policyholder who was referred, find out who referred them. That's an instant second appointment right there. If you find out who referred them, the people who referred them probably have American Income too. So that's a policyholder referral that you just got. After you collect the referrals. Oh yeah, I just want to touch on this again. It's important that you say, before I review your policy, I have something very important that I have to do first. It's important that you say that. You have to preface collecting referrals with, before I review your policy, I have something very important I have to do first. Okay? Otherwise, they're going to be kind of thinking, wait, I thought we were just going to review the policy. Why is he doing this? Okay? Preface it with that first so that they're not sitting there thinking, I thought that we were just going to review the policy. I don't know why we're doing all this extra stuff. Okay. So after you collect the referrals, then you get into educate them. Educate them. Once you can educate them, okay, the video is going to do a pretty decent job, but you're going to do an even better job. Okay, on policyholders, you're going to have paper. You're going to be drawing stuff out on paper. Do not confuse them. Keep it very simple. Okay, if you can't explain it to a 5-year-old, then you don't understand it yourself. You have to be able to explain this stuff so a 5-year-old could understand it. So there's no possible way that they can be confused about how the life insurance works. So educate them before you quiz them. All right. So I would never ask them what type of life insurance they have. Okay, especially before I educate them. Okay, or I'll never ask them if they know how term works, if they know how something works. Never ask them if they know how something works before you've educated them on it. The only reason that we quiz them and ask them if they understand how something works is to verify that what we just educated them on was understood by them. All right, so I'm going to educate them on whole life and term, and then I'll start giving them little quiz questions on the stuff that I just said to make sure they were paying attention. That's the only reason we quiz, to make sure they're paying attention and that we're on the same page. Then once you do that, you can tell them what they have. What I always do is I always do the whole life versus term drawing. And then I say, so Joe, out of these two types, which type do you think you have? And then I tell them what they have. If they have whole life and term, then I'll tell them there's no wrong answer, Joe, because you have some of both. And I go in to do my term conversion. So at this point, on a policyholder, this is all before the needs analysis. So this drawing and this quizzing them part and telling them what they have, it's all happening after the life insurance video, in and around that part. So the next thing we're going to come to is the needs analysis. So we run through the needs analysis. We all know how to do that. Make sure you find out what's important to them. Especially if you're sitting down with a single. He might be a single dad or a single mother. Okay, oftentimes a single father will not have 100% custody of their children. So you can be sitting down with a union member, a single guy, and you're looking around and you see pictures of his kids, but you don't see the kids, you don't see a wife. The writing's on the wall, but you haven't talked about it yet. So ask him, what's important to you? You know, when you die, who is it, like, who's important to you? So when you die, who do you want to make sure is taken care of? Okay, that's the simplest way to find out. Just ask him straight up. He might say, my daughter, she's 12 years old, lives with her mother. I get her on the weekends and for a month in the summer. Okay? Find out his daughter's name. Use her name. Okay? When you find out what's important to them, you're finding out who the beneficiary is. Wouldn't you say that knowing the beneficiary is the most important step before you go anywhere? Talking about life insurance. Because that's who the money's going to. If you've gotten halfway through your presentation and you don't know who the beneficiary is, your presentation's broken. Your mindset's broken. You got to find out what's important to them straight up. Okay, luckily with us, it's on their hard cards. But when we got policyholders, it doesn't tell us who the beneficiary is. Or I'm sorry, yeah, policyholders, it doesn't tell you. Okay, that's protected information. So find that stuff out. So let's say you're sitting with someone who's 45. They have $50,000 whole life. Okay, when we project out their funeral cost, for a 45-year-old, that's enough. That's enough whole life, right? That's going to put them within that range of 40 to 60,000, because today funeral or final expenses are between 10 to 15,000. So, so what I do with the client is I say, Joe, how much would you say final expenses are today? Okay, pretty close. No matter what they say, you say that's pretty close. They could say $1,000. Yeah, that's pretty close. They're between 10 to 15,000. Okay, so if they're 10 to 15,000 today, what do you think they were 20 years ago? On the paper, I draw an arrow backwards. 20 years. What do you think they were 20 years ago if they're 10 to 15,000 today? Hopefully they say 5 to 7, right? Or around 5,000. Okay, but sometimes they'll be like, I don't know, $300. Yeah, that's pretty close. Between 5 to 7,000. Okay, so whatever it is, that was pretty close, right? So between 5 to 7,000. So Joe, look at this. Over the course of 20 years, they doubled. They went from 5 to 7 to 10 to 15. Now I could bore you to death, Joe, and tell you the mathematics as to why that happens. Okay, but it's because of inflation. Everything goes up in cost. Every 20 years, the cost of things double. So 20 years from now, it's going to happen again. So what are they going to be when you're 65, Joe? Right, 20 to 30,000. So Joe, you got to at least live until you're 80. So let's go up another 20 years. They're going to be $40,000 to $60,000. $40,000 to $60,000. Now, Joe, why am I showing you this? I'm showing you this because a few years ago, I sat down with a gentleman who had to pay for his grandmother's funeral. And she died in 2010, but 40 years ago, she set up a plan to cover her final expenses. But she didn't think long term. The agent that was with her didn't help her think long term. So she only set it up for what funerals cost 40 years ago. So she only had $2,500. Her funeral was $10,000. This gentleman had to come out of pocket $7,500. This guy showed me a picture of the gun collection that he used to have. He had to sell all of his prized possessions, all his guns, in order to pay for his grandmother's funeral. So the smartest people in the world think long term, Joe. So we're going to think long term today. That's how I do funeral inflation for everybody. Every 20 years, we double it, okay? Now, if they're 30 or 50 or, in that weird age range that 20 doesn't, get them to 80, then just bump it up to 90. Who cares? Bump it up to 90. Or let's say that when you're doing those 20-year jumps, if they were 50, you jump up 20 years and double it, then you jump up another 10 years, increase it by 50%. So your 10 to 15, 20 years from now, when you're in your 70s, will be 20 to 30,000. 10 more years from there, Joe, it won't quite double. It'll go up 50%, so that's going to be 30 to 45,000. That's your range. That's how much you need for final expenses. Make sense? Okay, perfect. This is where you are right now. And I'll show them on the sheet where I drew whole life versus term. I'll show them you're at 10,000 right now, okay, which wasn't a bad start. However, this number over here, this is what you need. 30 to 45,000. This is where you need to be. All right, so let me go back to what I was talking about. If you're sitting with a 45-year-old and they have 50,000 of coverage already, you're thinking that that's not going to work because they already got between 40 to 60. Let's talk about paid up options, okay? The easiest way I can explain paid up options to you guys, so you don't have to do a lot of math, is that almost no matter what age you are, okay, as long as you're between like 20 and 50 or 20 and 60, after 20 years, between 50 to 65% of your policy is going to be paid off. It's going to be paid up. So that means if you have a $100,000 policy that you got at 45, when you're 65, it's going to be about $60,000 in your paid up option, because about 60% will be paid off. And you'd know that if you looked at the very last page of the rate book. Look at the very last page of the rate book. It's going to give you paid up options per thousand. If you look at the 20th year column, most of the numbers in the 20th year are between 500 and 650. And since it's per thousand, 500 to 650 paid up per thousand is 50 to 65%. Okay, I hope you guys understand that. If not, don't just blow this off like it's something you don't understand. You'll never understand it. Whip out your rate book and figure it out. I'm saying that 20 years into your policy, you usually have about 60% of it paid off. So, having said that, this 45-year-old who has $50,000 of life insurance already, I'm going to say, Joe, if you're anything like me, you probably don't want to have to pay on the rest of your life for something unless you really have to, right? Joe, if you're anything like me, you probably don't want to have to pay on something for the rest of your life unless you really have to, right? Okay, Joe, so what I'm going to do is show you how you actually don't have to pay on this for the rest of your life, and you're going to take care of your family for the rest of your life. Okay, so Joe, right now you have $50,000. What I'm going to do is show him how adding another $50,000 will not only give him double the coverage while he's making his payments, but everything will be paid off in 15 to 20 years for between 50 to 60,000 in total whole life coverage, paid up options. Okay, so you have 50 right now, right? If you double your coverage, now you're going to have 100,000. Now, instead of paying for 40 to 50 years, you're actually only going to pay for 15 to 20 years. And for those 15 to 20 years, you're going to be double covered, because right now is the time when your family needs money the most, because if you die now, they're going to miss out all the income that you're going to make over the next 20 years. Okay? So you'll be double covered in the meantime. So your family will be financially taken care of while they're growing up. And you're going to be able to stop all your payments around the age of 60, 65, and still have 50 to 60,000 in total paid up whole life coverage. You never have to pay for it again. Your family's guaranteed to get a check tax-free when you die. So Joe, do you want to pay for 15 years or 50 plus years? 15 years? Okay, we'll get it taken care of right now, but I don't even know if you qualify for this. Let me see if you even qualify. Okay, then I'll proceed to qualify them and then show them some options. So, even if you think they have enough coverage already, there's ways to help them even more. Also, be transparent. When you're adding coverage, don't be afraid to say, this is $90 a month in addition to what you're already setting aside. Okay? Please don't make them think that they're doubling their coverage and their payment is going from 75 to 90, not 75 plus 90. Okay? So when you do your summary sheet, I always like to write in the amount they're paying. I always like to write the old amount. So if they're paying $100 a month and I'm adding $150 to it, I'll write in the payment, I'll write $100 plus $150 equals $250. This way I'm not getting a phone call a month from now saying, hey, we saw that $100 was being taken out and also $150. I thought it was only going to be $150 for everything. Okay, that's because you were a little shyster in the house and you made them think it was only $50 more, and you know, come on, you know. The way they talk about it, like, oh, this is pretty good. It's only $50 more, double everything, right? No, you know what's up. Make sure you're transparent with them. Be transparent with them. I'm not afraid to say, Joe, option A, this is the most bang for your buck. Okay, this is like that magic bucket we talked about. Okay, it's going to add an additional $100,000 in whole life to the $50,000 you have already. So this is going to give you a total of $150,000 a whole life. Okay, and that's going to be an additional $120 per month. Only another $120 per month. Okay, option B does this. Option C does this. Okay? So don't be afraid to be transparent with that. And when they ask you, so is this $100 more or $100 total? Don't be like, well, when you think about it, be like, absolutely. That's what I say every time. They say, is this $100 more or $100 total? I say, absolutely. And no, I didn't freeze paying there. I was creating that awkward moment. Absolutely. I have no explanation. Why do I need to explain why it's $100 more? I already did all that. Okay? This is the most bang for your buck. All right, so real quick, when we're doing policyholders, we got to have more product knowledge. We got to know how to use the app a little better because we're adding on to what they have already. The summary sheets, I like to write out their old coverage plus new coverage. I give them one summary sheet with everything all on it. I don't just give them another summary sheet with what I added today. I rewrite the whole thing and put their old coverage plus new coverage equals total amount. I think the order of your presentation is also very important. So after the needs analysis, we're going to have some videos about final expenses, mortgage protection, income protection, then the proposal. So people ask me, where do I do the power phrase? So I do the power phrase between the proposal and the medical questions. So I hit them with, Joe, what's the most important thing in your life? Okay, you guys all know that power phrase. And then I do the takeaway. Now, Joe, as much as you need this and as much as your family wants you to have it, I don't even know if you qualify for it. So let's make sure you qualify first. Have you ever been to AA? So I'm going straight from proposal to power phrase, takeaway, medical questions. So when I go to the app, the first thing I do is click page 2. Medical questions. Go through all the medical questions. Doctor's information. My exact verbiage when I'm flipping over to page 1. Remember, I just did the medical questions. I'm going to say, it looks like it shouldn't be a problem for you to qualify. Who do you want all the money to go to? Now, keep in mind, they haven't even picked an option yet. And I'm asking them who they want the money to go to. I already know the answer. It's their wife. It's whoever. I mean, we talked about this already. So I already know the answer, but I don't assume it right there. I want them to tell me their name. Okay? And I don't say, well, you guys qualify. I say it looks like it shouldn't be a problem to qualify. Because when we do field underwriting, we're not qualifying them. We are field underwriting them to send the application to see if they can get qualified. Okay? So don't say, well, you qualify. Say it looks like it shouldn't be a problem for you to qualify. Who do you want all the money to go to? They're going to put down their wife and their kids. I like to joke around and I say, when I'm typing in the relationship for their wife, I say, now, Joe, do you want me to put down that she's your wife or your loving wife? And they always laugh about that. Okay? You want me to put down that she's your wife, loving wife, roommate, housemaid? Which one do you want me to put? Okay? Could go the same way for the husband. And then after that is when I show them the options. So let's think about the psychology here. We built the need through doing the presentation. We made sure their family was the most important thing in their life. After that, we took it away like, they really need this, but I'm not sure if you can get it. We did the qualification, or we did the medical questions. Looks like it shouldn't be a problem to qualify. We asked them who they want the money to go to. They're giving it away already. Before I presented an option to them, they're giving it away already. So if they've given it away to their family already, how can they not pick A, B, or C? How could they not pick an option of something they already gave to their family? They already said my wife is getting this money. Okay? So at this point, it's not even a matter of having a rebuttal and, deal with objections. You're just closing them. It's just which one are you going to go with? Okay? And I always add tangibility to it. So I'm not just going to say A is 100,000, B is 50,000, C is 30,000. I'm going to say A is the most bang for your buck. This is 150,000, a guaranteed whole life, which means that when you die, Joe, your family can pay off the rest of the house. That means they can use this for your final expenses. That means that if your house is taken care of already, they're going to have 5 years worth of your income, plus all your final expenses are taken care of. And this is also your magic bucket. Okay? Every penny you put into it, you're guaranteed to get that and more back out of it. Okay? And that's only $150 per month. Okay? So I tell them what each option will do. Okay? So when it comes time down to pick one, I say, so Joe, knowing that when you die, your family's going to need to have your final expenses taken care of. They'll need to have your mortgage paid off so they don't lose the home. They'll need to have some income to take care of them financially. So knowing when you die, all those things need to be taken care of. Which one do you feel most comfortable with to protect your family? You don't need to say anything else. If there's awkward silence, don't sell yourself short and be like, well, you could just do option C and get your foot in the door, okay? Because you're going to sell yourself short. They might be thinking, you know what, Joe, we're saving $600 a month in our savings account already. This is, we're going to get every penny we put in plus some back anyway. We might as well just put $200 a month towards this and put $400 into our savings, okay? And then you'll crap your pants and pass out and you walk out with $2,400 ALP, okay? When as before you were going to talk yourself out of it and just get, like $50 a month. All right, so just chill. If you got to rebuttal them, you'll rebuttal them when it happens. But just have patience. And then I'll wrap up with just when you're calling POS, don't flip through and look and see what all they got in coverage. Just freaking call them. Okay? It's not going to change your phone presentation because you looked through and saw that they had 50,000 in coverage already. The only thing that's going to happen is that you're going to see something you don't like and it's going to make you not want to call them. Okay? Just look at the front sheet and call them. You're wasting time if you're flipping through to look and see what they got. You can be concerned about what they got once you set the appointment. And then I'll just reiterate, do not forget to collect referrals off policyholders. Don't just go in there as the insurance guy right away. Hit them with, before I review your policy, I have something very important I must go over first. Get the referrals. On the phone, make sure you tell them, hey, do me a favor, go ahead and grab your policy. If you can find your policy folder, go ahead and grab that out. If you want to do that today, go ahead and grab it out, put it out on your countertop, and that'll serve as a reminder so you don't forget I'm coming, okay? So, and also make sure you let them off the hook if they don't have the policy folder. You say, and even if you don't have your folder, don't stress yourself out trying to find it. Okay, I know you guys said you just moved. I know when I move, I got stuff in boxes for months before I unpack it, so it might be at the bottom of a box somewhere. Don't stress yourself out. I'll make a new folder for you. If we have to order new policies, I'll do that for you too. I'll make sure you're taken care of, okay? But when you get to the table, that should be the first thing that you have your hands on. Okay, if they don't have their folder out, have them go get their folder. Make sure they go get their folder. If it takes them too long to find it, tell them, hey, don't worry about it. I'll just make a new one for you. Okay, but if they do have their folder, I want you to go ahead and get all the junk, all the crap that they don't need out of it, like all those extra papers that come along with the policy, or all the extra forms that were kind of like receipts from the day they got their policy. you can take all that extra crap out of there. Make sure they have their policies, freedom of choice certificate, summary sheet, and they have the claim forms on the other side with the layoff waiver, strike waiver. If they have a bunch of like health service discount cards in there from the past, get all that extra crap out of there, clean it up. You know, I've seen people that have 5 different folders. They're all like this thick. So do a service for them, clean it up. And I feel like I can't even do the presentation until I've cleaned it up and gotten organized. Okay. So that's all I got for you guys. I saw Mikey Russin just jump on. I'm assuming you're next. Is Russin next?
Oh, yeah.
We get to hear from Russin. Oh my God, this is going to be ridiculous. We're going to write so much business today. All right, bro, let's take it away.